Billionaire Paul Tudor Jones reveals how BTC will reach $10 trillion. Whether you're a seasoned investor or simply curious about the future of finance, you won't want to miss this insightful and thought-provoking video. How will Bitcoin achieve such a monumental feat? In this must-watch video, we delve into the mind of this visionary investor and uncover his insights into the future of Bitcoin. But before getting started, hit the subscribe button and turn on the bell icon. In an era of economic uncertainty and rapidly evolving technology, Bitcoin has emerged as a true disruptor of traditional financial systems. Billionaire hedge fund manager Paul Tudor Jones sees this emerging asset class as a game-changing investment opportunity with the potential for a massive shift in the global wealth paradigm. In his recent interview, Jones revealed his belief that the cryptocurrency market would eventually reach $10 trillion in market capitalization. According to Jones, this unprecedented growth will be driven by Bitcoin's increasing acceptance as a legitimate asset by institutional investors and the general public. This gripping video reveals how he sees Bitcoin skyrocketing to an astounding $10 trillion valuation and the factors that will make this prediction a reality. Bitcoin, BTC, has exploded in popularity since its introduction in 2009, making it a major player among digital currencies. As a decentralized peer-to-peer digital payment system and the first-ever cryptocurrency, Bitcoin has gained widespread popularity and adoption, with millions of users and a staggering market capitalization of over $500 billion. The growth of Bitcoin has been fueled by several factors, including its decentralized structure and the rapid advancement of blockchain technology. Moreover, Bitcoin has been increasingly viewed as a hedge against inflation, with many investors turning to digital currency as a store of value in times of economic uncertainty. The success of Bitcoin has caught the attention of many prominent investors, including Paul Tudor Jones, who has publicly praised the digital currency and its potential as a hedge against inflation. Jones has expressed his belief that Bitcoin could become an even more significant store of value than gold. He has strategically invested in cryptocurrency, highlighting its growing significance in the global financial landscape. Paul Tudor Jones is a highly esteemed billionaire investor and hedge fund manager, widely recognized for his acute investment strategies, consistently demonstrating superior financial performance. Born in 1954, Jones began his professional career as a trader with E.F. Hutton & Company in 1976, before working for many prestigious investment banks and brokerage firms throughout the late 1970s and early 1980s. In 1980, Jones founded Tudor Investment Corporation. This private investment management firm has since grown to become one of the top-performing hedge funds in the world, with more than $7 billion in assets under management. Jones has been hailed as one of the most successful and influential investors of his time, with a track record of delivering outstanding returns to clients across various investment vehicles. But what does he have to do with Bitcoin? And what is his stance on it? During an interview with CNBC's Squawk Box on October 10th, hedge fund manager Paul Tudor Jones expressed concerns over the potential consequences of failing to tame inflation and warned of the necessity for substantial fiscal retrenchment. Despite this warning, Jones admitted to holding a small allocation of Bitcoin, citing its potential value in economic turbulence. According to the renowned investor, cryptocurrency, particularly Bitcoin and Ethereum, ETH, offers potential value that cannot be found elsewhere in a landscape characterized by an overabundance of money. This sentiment underpins Jones' steadfast commitment to maintaining his existing allocation in the digital currency market. Jones is not alone in his belief in the potential value of cryptocurrencies as a hedge against traditional assets. Many investors have turned to digital assets as macroeconomic uncertainties continue to mount, with Bitcoin and other cryptocurrencies serving as a means of diversification and risk management. Although the billionaire could not predict when this day would arrive, he did say that its value would increase significantly due to its limited availability. Jones' bullish case for cryptocurrency is based on several macroeconomic factors that he believes will strongly influence its future trajectory. One of the biggest drivers of Jones' optimism is the unprecedented measures taken by central banks and governments to cushion the economic impact of the COVID-19 pandemic. Massive monetary stimulus packages have injected trillions of dollars into the global economy, with central banks aggressively pursuing low interest rate policies. Jones believes that this flood of liquidity will eventually lead to inflationary pressures as the value of fiat currencies declines concerning assets such as gold and Bitcoin. Bitcoin's decentralized characteristics and restricted quantity make it a desirable inflation hedge. Unlike fiat currencies, where governments can endlessly print and gradually lose their value, Bitcoin has a fixed supply cap of 21 million coins, making it a deflationary asset by design. This scarcity, combined with institutional investors' growing adoption of Bitcoin, drives up demand and supports its value. Speaking of institutional interest, Jones believes we are only at the beginning of a long-term trend of mainstream adoption of Bitcoin. Increasing numbers of large corporations and investors are allocating funds to cryptocurrency, with several public companies such as Square and MicroStrategy buying Bitcoin as a reserve asset. In addition, major investment firms like Fidelity and BlackRock are ramping up their offerings of Bitcoin products to meet growing client demand. Jones' initial stance on cryptocurrency was somewhat unenthusiastic, with many interpreting his views as lukewarm. However, around midway through 2020, the legendary hedge fund manager revealed that he had made a significant investment in Bitcoin, with his holdings reportedly comprising between 1 and 2% of his vast portfolio. As the year progressed, Jones made even more waves by publicly suggesting that he may boost his cryptocurrency holdings even further if the Federal Reserve continued to pursue its current policy of monetary debasement. Indeed, he hinted that he would be willing to allocate up to 5% of his portfolio into Bitcoin if the conditions were right. Jones' comments definitely added to the already bullish sentiment in the crypto markets during the time, and many industry observers hailed him as a visionary for recognizing the potential of digital assets. Whether or not Jones had always been a die-hard crypto enthusiast, his actions helped fuel interest and investment in the burgeoning sector. As Bitcoin continues to surge in popularity and value, many experts predict that it could eventually reach a market capitalization of $10 trillion or more. But what factors drive Bitcoin's growth, and how likely will this ambitious goal be achieved? One potential catalyst for Bitcoin's continued growth is institutional investors' increasing adoption of cryptocurrency. This trend began in earnest in 2020, when several high-profile companies, including MicroStrategy and Square, invested significant sums of money in Bitcoin. This institutional endorsement has helped to boost public confidence in Bitcoin, leading to more widespread adoption by individual investors. Another factor driving Bitcoin's growth is the increasing interest in decentralized finance, DeFi applications, and non-fungible tokens, NFTs. These emerging technologies are built on the blockchain, the same technology that underpins Bitcoin. As interest in DeFi and NFTs grows, so does interest in Bitcoin as a secure, decentralized asset. The evolving regulatory landscape also plays a crucial role in Bitcoin's growth. While there is still much uncertainty in this area, many countries are beginning to introduce legislation recognizing Bitcoin as a legitimate asset class. For example, in recent years, Japan, Switzerland, and Singapore have passed laws recognizing Bitcoin and other cryptocurrencies as legal tender. Of course, there are risks to investing in Bitcoin as well. The decentralized nature of blockchain makes it difficult to regulate, which could lead to increased volatility and potential security risks. As more institutional money flows into the market, it could become increasingly difficult for individual investors to profit from Bitcoin. Despite these challenges, many experts like Paul Tudor Jones believe that Bitcoin will continue to grow in value and eventually reach a market capitalization of $10 trillion or more. Whether you choose to invest in Bitcoin or not, it's clear that this emerging technology is changing how we think about money and finance. Despite Paul Tudor Jones' optimistic take on digital assets, particularly on Bitcoin, his recent comments have not yet resulted in a significant shift in the cryptocurrency's price. With minimal movement, Bitcoin has been hovering around the low $29,000 trading range. Market analysts suggest that while Jones' remarks hold enormous significance in the crypto community, large investors are likely taking a wait-and-watch approach before committing to a significant purchase. It remains to be seen whether Jones' bullish outlook on Bitcoin is strong enough to generate a substantial price boost for the popular currency. Only time will tell whether his bullish predictions come true, but one thing is sure: if they do, it could revolutionize the world of finance. Like and share the video, and do comment on what you think about the evolution of Bitcoin. Will it reach $10 trillion or not?